Looking to upgrade? Three ways to use your equity to buy another property. Want to upgrade to a bigger or a better home, but wondering how to make that move without selling your current home first? You are not alone in this. This is one of the biggest questions I get from homeowners that are ready to move but are stuck. Like, what am I going to do? But the good news is, if you've built up equity in your current home, you may already have what you need to buy your next home. Or even, and this is even before you sell your current home. So today I am breaking down 3 smart ways to use your equity to buy a new home, then sell your current home after. Let's get going. So maybe you've outgrown your current space, you want a newer neighborhood, a newer house, a better house, you want to upgrade from your starter home to an upgrade home, or you want to, whatever it is. But if the thought of selling your current home before buying your next home is overwhelming, feels overwhelming, you're not alone, or risky, like, whoo, am I going to be homeless? What am I going to do? Chill. Let's talk about using your equity to do this. Because you have equity, you have options. So let's look at the 3 options that are available. Option 1, called HELOC, which is Home Equity Line of Credit. This is like a flexible credit line based on your home value. You borrow only what you need, often with interest-only payments. Here's how it works. Home Equity Line of Credit. You open an HELOC, is an acronym, Home Equity Line of Credit, HELOC, while you still own your current home. Don't put your house on the market. You open an HELOC. Now, that HELOC, you're going to use it for down payments and closing costs on your next property. Move into your new home, boom, then sell your old home. Pay off your HELOC, and you're done. Right? Here's an example. Let's say your home is worth 500,000 and you owe 300,000 on it. That means your equity is 200,000, right? A lender may let you borrow up to 120,000, 120,000 of equity through your HELOC. You apply for that. Here are the pros of HELOC. They are flexible borrowing. You only pay interest on what you use, and you only pay when you use it. You also keep your existing mortgage, is right there. These are the pros. The cons is a variable interest rate. Your monthly payment starts immediately after you borrow the money. This is best for people with strong income who wants to avoid selling first but still want to stay competitive when buying. Number 2 option is bridge loan. A bridge loan is a short-term loan that's what it's called, bridge, that bridges the gap between your current new home and selling your new home, selling your current home. So how it works, this is how it works. You get a temporary financing secured by your current home. Use the fund as a down payment on your new home because you have equity. So once your old home sells, you pay off that bridge loan. Here is a real life example. I worked with a couple who needed to upgrade for their growing families. They are growing their home, so they used the bridge loan. The bridge loan helped them make that transition, make them competitive when they want to offer a new, make an offer on their new home without contingency on selling their current home. And once they sold their current home, they paid off the bridge loan completely. So what are the pros? The pros of using a bridge loan is you buy without a sale contingency. That means you're saying, I don't have to sell to buy. You're competitive you stay competitive in a fast moving market, and you can avoid temporary housing crisis. The cons are, of course, they have cons. because it's a bridge loan, it's higher interest rate. The interest rate is going to be higher. It's also a short term, which is usually between 6 and 12 months. And this actually requires strong financial. Your financial has to be strong to qualify. This is best for homeowners with strong equity and income who want to move quickly and sell after. Number 3 option is called 80-10-10 loan, also known as a piggyback loan. This is a creative structure which combines 2 loans to help you buy before selling. Here is the breakdown. 80% first on your first mortgage on your new home. You get 80% on your first mortgage on your new home. Then you get a second mortgage tied to your current home as a second loan, 10%. Then you get another 10% down payment, which can come from your savings or wherever, or from your equity, so that you have 80% on your new home, 10% on your current home, another 10% on that you have from saving. Here is a helpful thing. If you can finance the new home without pulling all cash out immediately, and once you sell your current home, you can pay off that 10% loan, second loan that you have, or you can recast your mortgage. What are the advantages, pros of this? You avoid private mortgage insurance, because the reason why you want to do 20% down is to avoid PMI. Then you are able to buy before you sell, and you also retain some kind of financial flexibility with 80-10-10. What are the cons? It's a more complex system that really, and then the other thing is require a lot of coordination between lenders, and they are not really popular. Not every lender offers this. This is best. This loan, the 80-10-10, is best for buyers that don't have a lot of savings, but they have good credit and want to preserve cash flow from their current home. Before choosing a strategy, make sure you understand your monthly payments. Every one of these strategies does have a monthly payment, and you may want to make sure you have a backup plan in case your current home takes longer to sell. It's very, very important. If you're anticipating you're going to sell in 2 months, if it takes 6 months, you want to have a backup plan. Also want to talk to a lender and your real estate agent early in the process, so that we can let you know that knows your local market. If homes are selling fast, the risk is lower. If you're thinking about upgrading and want to buy first, I can help you exploit these equity strategies and connect you with the right lender to make it happen. Listen, the one by far that I like is HELOC. But whether you need a HELOC or a bridge loan or a creative financing, there's always a solution, right? But like I said, the one I like by far is HELOC, and a lot of my clients have used it to move up and then sell. All right. So don't forget to like this video. If it helps you, hit that subscribe button for more on home buying tips, and drop me a comment if you're thinking about buying before you sell, or if you have done it and how it helped you. What did you do? If you also want a free equity assessment and a custom game plan specifically for you, let's connect. Drop me an email or DM me in the description so that we can get together. No pressure, just my expert guidance. Until next time, happy home buying, happy home selling. Ciao. Don't forget to subscribe.